This is the live market open for Friday, February 19th. I'm Yohay Elam, Forex Crunch and Market Movers podcast, doing the show as usual for FX Street. Okay, so unusual on Friday, of course, we'll talk about recent developments, charts and levels, and what's up next towards the end of the week, and of course, a preview for next week. Most importantly, I'm looking forward to your questions. If you cannot see the chat box alongside the video, please go to the address on the screen, tlk.io/fxstreet-live-video. Yeah, very frosty UK. Must say that also here in Spain, we're probably suffering from the same wave of cold air. But yeah, it's not that bad here. But also in markets, things have cooled down just a bit. As usual in recent weeks, I'm starting from the mood. Oil is off the boil. Okay, I got that nice headline. We're seeing oil prices above $30, but off the highs of $31.50, $31.70. And of course, as we've learned, this impacts the mood, okay? When we have higher oil prices, we have higher risk. We see commodity currencies and the pound rallying and the yen and the euros suffering. But now the mood is worse. Oil is off the boil. Oil is a bit sliding. Asian markets are sliding. Not any kind of collapse, but I would call it more like something like profit taking, okay? So we're seeing after a few positive days, actually since last Friday, we've seen positive stock markets, positive oil, better mood. Now we're seeing probably some profit taking. I don't see anything really wide hurting markets. What we do have specifically is around the pound, okay? An all-nighter in Brussels reminds me of the talks about Greece in July, but this time they did not reach an agreement. The talks will probably continue into the weekend. Okay, there have been some difficulties in securing, reaching a deal between the United Kingdom and the EU and the EU membership. I still think it's all political theater. Cameron doesn't want out. It's an internal politics game within his party and sort of move to battle a UKIP. And eventually they'll reach some deal, and he can show his members that he gave a fight for Britain on issues that perhaps are not so important. But well, that's my opinion. Anyway, any doubts about Britain's role in the EU, of course, hurts the pound, and we're going to show that on the chart just a bit. In Australia, we had some talk about early elections. It's a bit of political uncertainty as well, so, but not that significant. And we heard tonight that China is contemplating some minor tightening, not easing, because it loosened activity in the banks too much. Okay, but that's also not really huge. Let's talk a bit about charts and then talk about the event we had yesterday. So let's begin with the pound. Well, let's begin with oil. We're already here. So yesterday we already reached nearly 32. The mood was a bit better. Now we're off the boil, as I said. 30.50 is the current level. The low for today, 30.32 WTI crude oil. And this is, of course, sort of a leading indicator for mood, the mood in markets. And this means a higher euro dollar, okay? Yesterday, why is this here? Yesterday we fell to the line I've been talking about many times, and I'm really happy that technical lines work in euro dollar. It hasn't been the best pair in terms in technical terms, but yesterday we did fall to 110.70, which was support several times here, as you can see. All right, so it's working really nicely. And but since then we had a worsening of the mood, profit taking, and a rise in the pair at 111.20. The high for today has been 111.30, a slow start for the euro this morning. 112 remains resistance. Okay, now let's look to Brussels. Yesterday also better mood in markets throughout most of the day. We had pound dollar almost touch 144. Now it's worse. In the past few minutes it's rising a bit. Maybe we have some news from Brussels, but all in all it's been a bit depressed from the lack of an agreement. I must say I'm a bit surprised because I had expected them to reach a deal, because everybody wants to reach a deal. No, I can't see anything big news, but anyway, I believe it'll be resolved over the weekend. Okay. Okay, so what else do we have on the agenda? The Dollar yen, of course, the yen is a safe haven. The mood has been better since last Friday, so we had it move back from the lows, but it's been sort of grinding in range, now falling back down. Dollar yen means a stronger yen, and this is because the mood is worse. 113.10. We heard some noises from Japan about monetary stimulus, but we'll have to wait and see. There wasn't any really big headline. Dollar CAD, of course, influenced by oil prices. Yesterday they fell, and dollar CAD fell alongside the rise in oil prices. Stronger loonie with stronger oil. Now we're seeing it rise once again. 137.87 remains a critical line of resistance, followed by 139.10, support 137.20, and 136.20. Okay, Aussie dollar also off the boil, off the highs of above 71.40. It got close. Well, 71.85 was the high yesterday. The 70.80, I would guess. Yeah, I would say it works as some kind of support, but really critical support awaits at 70. Okay, so this is again risk off. Kiwi dollar 66.20, more or less in the middle of the range. Here the moves have been a bit more benign. 65.80 still, no, sorry, 65.50 is support, 67 is resistance, but the pair slowed down a bit. We didn't have any news from New Zealand. Dollar Swiss around 99, got closer to parity. Remember, influenced by the S&B. Here we can see, I think, the work of the Swiss National Bank and Euro Swiss, their favorite pair, keeping it afloat above 110. This recent rise of the euro against the dollar in recent hours, of course, helps them. And also Euro Swiss is higher. Euro pound, it's becoming a bit messy here. Okay, 77.40 used to be very, very strong support and then turned into resistance. But now we're chopping, I would say, all over the place. So we need to update the lines here. 77 is some kind of support. High resistance still 78.70. Okay, in general, risk off means a stronger euro. Doubts about the UK's membership, weaker pound. Okay. Euro yen continues its fall because this yen is a stronger safe haven than the euro. So actually it broke lower ground here under 126, which provided some support. The low so far has been 125.30. So I would say this is here we could say that we're seeing some kind of significant fall, a significant fall. Wow, I didn't even notice that we're at the lowest levels since June 2013. So it's close to 3 years, 2.5 years, and we're falling down quite a lot with the pair. Mostly I can attribute it to the strength of the yen, of course. Euro yen is falling. Pound yen, I see here a few questions. When this is one of the more exciting pairs, as I've talked about. Now we have deterioration in the mood. That means a weaker pound and a stronger yen, and the pair is on lower ground. 162, 160 remains support. We reached the low of 161.30 and resistance at 163.80. Working very, very nicely, this resistance line. Okay, let's see a few comments we have here. I'll try to answer everything. Okay, question from Carol. Could you quickly just explain what you mean when you say risk on, risk off? Okay, this is one of the, I know it's confusing. Usually in the good days, we had this kind of good news is good news and bad news is bad news. When we have good news from one country, the currency goes up against all the rest. When we have bad news, the currency falls down. What we've seen several times during the crisis, since the financial crisis and also in recent months, is that we have this situation where currencies are following the lead of commodities and stocks. Okay, when I say risk on, that's a good mood in markets. Stock markets rising, oil rising, other commodities rising, and this means an appetite for risk. Risk on, take risks by buying the Australian dollar, the New Zealand dollar, the Canadian dollar, and also the pound is sort of in this camp. Okay. When there's risk off or risk aversion, it means there's fear about the global economy. Money comes back home to where it's lent cheaply. That means in this case, and I mean in the past year or so, it's of course the yen, the ultimate safe haven, and also the euro. So money that is lent very, very cheaply in euros and yen to buy risk when it's risk on comes back home when it's risk off. Okay. So we see a fall in stock markets, a fall in oil, a fall in other commodities, fall in commodity currencies, and the euro and the yen strengthening. That's risk off or risk aversion. Okay, so good mood in markets is risk on, risk appetite. Bad mood is risk off, risk aversion. Okay, and when we have risk off, we also see bond buying of safe government bonds like U.S. bonds, German bonds, things like that. And when we have risk on, it means we don't need these safe bonds. We're going to buy riskier stocks and go for riskier currencies. Hope this answered the question. Comment here by Reg, not sure how to pronounce the nickname. Anyway, Venezuela hiked gas prices big time, petrol prices 60-fold. Wow, that's quite amazing. Anyway, Venezuela is in trouble. Saudi Arabia is in trouble. Russia is in trouble because oil prices have collapsed and they remain lower for longer. Okay, the big fall, we had the highs more than a year and a half ago in the summer of 2014. Big collapse in November. Some stabilization during 2015, but another fall towards the end of the year, and then we're at lower prices. What we have in Venezuela and in Saudi Arabia and some other Gulf countries is that because oil is in such an abundance, so easy to dig it out of the ground, that the governments there give it basically for free or almost for free for their citizens to keep the people happy. Of course, this encourages wasting oil and using gas guzzlers and things like that. Anyway, when things get bad, they stop subsidizing it, which of course causes political trouble. And we should watch out, maybe Venezuela less than other countries. In Saudi Arabia, if the regime is not that strong there, or in Russia, you know what happens when you have problems at home, you go find external enemies, and that's a problem, of course. Another question here, what does QE mean? Oh, okay. QE is quantitative easing, very nice word for basically central banks have the authority to create money out of thin air. So that's what they do when they want more money in the economy. The official idea is you create more money, you print money, okay, and you buy with it long-term bonds. And this affects long-term investment, okay? So let's say if you're taking a mortgage, and in many cases the interest rate depends on the long-term interest rates, not only on the short term, which the bank decides, but also on the long term. So when the central bank buys long-term bonds, bond yields go down and lending becomes cheaper. It also has side effects, because if a bank prints more money, the money is worth less, so the currency devalues. So the exports of this country become more attractive. They have a competitive edge. In addition, central banks want to push inflation higher, so it makes imports more expensive. It also triggers, incentivizes people to buy local products rather than imported products. Okay, so that's sort of the quick explanation. You see here another comment. President Nicolas Maduro announced that at the pump price of premium gasoline would jump from just under 10 cents, 0.1 bolivars per liter to 6 bolivars. Wow, okay, that's a big jump. 1.5 US cents to 95 cents, and 60-fold. Yeah, so that's a big move. Let's see how the people which are poor in general and suffer from a high rate of crime take it. Okay, let's go back to what we had yesterday in markets, because we did have quite a few releases. Not all of them were negative. Okay, so we had the ECB meeting minutes. of course, released a month after the meeting. We didn't learn anything new from them. We learned that the ECB is worried about inflation and that they're ready to act in March. And they're more or less, there is a consensus, but we don't know what they're going to do, okay? Since then, we had quite a few developments. We had Draghi repeating its stance, saying once again, we never give up, or it's better to act than not to act. Got support from German central bank, which doesn't happen every day. Anyway, we had sort of a bit of a choppy action around this release, but eventually didn't move markets in the, well, after half an hour, things didn't change that much. We had good news from the United States for a second week in a row. We had jobless claims fall to the low end of the range, which is good news. Less people out of work, 262,000. Good news. I think we could have a strong NFP report, perhaps, or expectations for a strong NFP report in early March. And the Philly Fed Manufacturing Index. Usually manufacturing is a big disappointment. It didn't disappoint. It just came out as expected. Okay, let's talk about what we have today. The big event for the morning. Well, it's going to be, I think, is Jack's here in the room. Anyway, he asks, what are the hot currency pairs for the day? And I would say the pound is certainly, at least in the morning, because we have ongoing headlines from the EU summit. All right, in or out. Again, I think it's political theater, but and then we have perhaps something more substantial, retail sales in the UK. Let's look at what we're expecting. So it's released at 9:30 GMT. Okay. We're looking at month over month, the rise of 0.8. This could sort of month over month of the headline figure has more impact than year over year or the ex-fuel figures. Anyway, also for year over year, we're expecting a rise from, 3.6 after 2.6 last time. In general, this does have a significant impact, as we know in the past, because it's a key economic activity. What else do we have today on the agenda? The Fed's Mr. I forgot her first name. Anyway, she's the president of the Cleveland Fed, and she'll be speaking. Loretta, sorry. So Loretta Mester, she's a relatively hawkish member. If she talks about rate hikes, it's not going to be a big deal. If she goes dovish, it is a big deal, okay? But I don't think it's going to be a really big event, but it's worth watching. It's at 1 p.m. GMT. Anyway, these are the rate hike expectations. 95% against the rate hike, or even more, in March. Fast forward to February 2017, a year from now, we're seeing a small chance of a rate hike. Just a moment, I'll be back. Hold on. Sorry for that. Hope you're all here. Another comment here from Jax. Yeah, okay, you responded to what I said. Pound has been almost untradeable lately. I've not touched this this week. Yeah, I think it's a bit more messy because of the retail sales report and, of course, the EU referendum. And again, I think eventually this will be resolved, okay? Then in the US afternoon, well, we mentioned Mester's speech. We have also at 1:30, this is the main event for the day, the US CPI, okay? I'll talk about that just a moment. We'll just cover the other events. And if you're trading the Canadian dollar, also for Jax, one of the most important, another interesting pair to trade is the dollar CAD, because we have the figures over there, and oil prices. And at 3 GMT, we have Eurozone consumer confidence, expected to remain weak in general. Let's talk about CPI. You might have to run for another second. I'm sorry, apologize for this mess, but anyway, let's talk about CPI. Okay. So the most important figure here is not the month over month, but the year over year. Okay. So it's the consumer price index, excluding food and energy, the core CPI year over year. It's expected to rise by 2.1% exactly, like last month. No, it's not a pizza delivery. It's another delivery that has an unfortunate timing. Anyway, 2.1 year over year core inflation. The Fed cares about core inflation. The Fed has another measure of core inflation, which is the core PCE price index, which is released next week, but this is also, of course, of high importance. Also note the year-over-year headline figure, which of course is influenced by oil prices. So here we're expecting a big move up to the upside. Why is that? That's because of the change in the base effect. Okay, because oil prices are they had their biggest fall early last year, and if we look at year over year, we're expecting these base effects to move away. Okay, so oil prices last year, WTI crude oil was around $45-50. Yes, it's now only 30, but if you look at the year before, or it was, I mean, around 100 or something like that. So it's quite a big deal. Okay, just 1 second, I'll be back. Sorry. So also month over month figures are worth mentioning, of course, but not. I don't think they will have an impact. As you can see here on the FX Street calendar on Forex Crunch, the emphasis is on the year-over-year figures, and for a good reason, because that's what the Fed looks into as well. Okay. Anyway, sorry for this small mess. Regarding the Canadian dollar, we have this double feature. It happens every month: retail sales and inflation. Surprisingly enough, in the past, we've seen retail sales move markets more than inflation in Canada, even though the mandate of the Bank of Canada is, of course, inflation. Anyway, as I say, with these kind of double features, it could be messy because figures could go both ways. All right, so the most important figure is, I think, also here, the core inflation, which has been quite stable also in Canada, 1.9, expected to remain the same. Also look at this general CPI, which is expected to rise from 1.6 to 1.7. Retail sales, as I said, could have more of an impact. I don't know why, and this doesn't make sense, but they sort of had the upper hand. So retail sales, if you're trading dollar CAD, a drop of 0.6 this time after a rise of 1.7. So it's going to be a messy event, especially as we have at the same time the US CPI. So perhaps, I mean, it's going to be a very interesting pair to look at, but perhaps not very practical to trade. Okay, so yeah, and consumer confidence in the Eurozone expected to drop from minus 6.3 to minus 6.7. Remember, the negative numbers mean pessimistic atmosphere about the economy. Okay, I think these are the events for today. Have any more questions? A lot of questions beforehand. Let's see if we have news from the EU summit in Brussels. In July it was the Brexit, now it's the Grexit, now it's the Brexit. Okay. So we talked about, let's do a recap of what we had this week. Later in the show, of course, we'll do a preview for next week's events. And of course, your questions are welcome. Any more charts, of course, you want me to look at? You know what, don't have the recap of last week. Let's look again at what charts are telling us. Let's see if we have any movements here. Okay. Yeah, so we're seeing this ongoing profit taking, ongoing risk off. As I explained earlier, risk off means negative atmosphere, buying euro, buying yen, selling all the rest. So we're seeing in the past hour another strengthening of euro dollar. Not anything earth-shattering, but we're already 60 something pips off the lows we've seen yesterday. And dollar yen fell below 113. We heard some things from the Bank of Japan and the Japanese government. They don't like these moves. Of course, they don't like it, especially after they set a negative deposit rate. They wanted to see a weaker yen, not a stronger one. I see your question. Does the market seem happier when the dollar strengthens? It depends against which currency. Okay, so the dollar is sort of in the middle between the safe haven euro and yen and the risky commodity currencies, the Australian dollar, Canadian dollar, New Zealand dollar, and also the pound. So it's sort of a mixed bag, I would say. If that answers the question. The market is happy when it's happy, when stocks are rising and when oil is rising. So in many cases, if we hear about a cut in production, which is not supposed to be such a good thing for most developed economies, then we have sort of a risk-on sentiment. Oil is rising, everything's good, stocks can rise once again, and that's just the reaction we've seen. The markets don't know how to differentiate between oil moves that are based on demand, and that's important because if we have more demand, it means usually it's related to stronger growth, and less demand, less growth, and that's really significant in oil prices. Or if it's a supply, which is individual events. The big event, let's mention this week, was regarding oil, and I think of course, it had a big impact on other markets. We had Saudi Arabia and Russia meeting in Doha, Qatar, and agreeing to freeze, or talking about freeze in production. Both countries are at record production, so it's like, I don't know, trying to, vowing not to speed up when you're already at full speed, but you're not ready to slow down or something like that. Anyway, it's quite a big mess. In addition, Iran basically said in many other words that they'll be ready to freeze once they reach their previous production. In other words, forget about that. Libya, same thing. I mean, they suffer a civil war there as well, so they're also about to. They want to first raise production before they freeze it. And of course, the U.S. shale industry is not part of the game, and they're very flexible. Higher oil prices, more production, lower oil prices, less production. They can react very quickly. Okay, I see here another question. Seems like stocks rose at the dollar and fall with it. Well, again, it depends on which currency, against which currency. Just seems that way. Have no facts to back that up. Yeah, when it's euro dollar and dollar yen, I agree. When the mood is positive, we see a weaker euro and a weaker yen against the US dollar. That's exactly what's going on. But it does. If you look only at these currencies, yeah, that's correct. But it's not only these currencies. I mean, I wouldn't say it's a general dollar strength. We did see a few such episodes, okay, of general dollar strength and good US figures, but most of the time it's still this risk on, risk off, in which the biggest moves are the crosses of the euro and the crosses of the yen against commodity currencies. Okay, that's a general move in markets. Again, we had this 2 weeks ago, the terrible ISM non-manufacturing PMI, and then the dollar just dropped against all currencies, okay? And sometimes we have better than expected figures is when we had the dollar strengthening across the board, but this was, I would say, 20% of the time we had things like that, and the rest of the time it was risk on, risk off. Now Draghi doesn't call me, unfortunately. I would love to be a fly on the ECB as well to see the discussions going on over there. And Draghi, I think, is the master of central bankers. He always provides drama. Unfortunately, we don't have any contact. Anyway, some Friday fun. Okay. Any more questions? Or let's see if we can get some new headlines for today. I don't see anything new, but big event, of course, of the morning is that the EU summit is still going on. Regarding this, I see here headlines talking about that Cameron has upped his demands on migrant welfare cap at the start of the summit. That seems to be the thorn, the problem. Anyway, as I said, I think it's let's look at the pound, but I think it's more political theater than anything else. Okay. Anyway, pound is under this 143.65. We crossed it yesterday. 142.30 still support. Okay. So maybe we'll just begin with the wrap up for today, and then we'll do the preview like we do every Friday for next week's events. Yeah. Okay. Anyway, your questions are, of course, always welcome. So this is the live market open for Friday. Happy Friday, February 19th. It's been a long week, and we had some kind of change in mood. So oil is off the boil after it began recovering, and all this talk about production freezes, cuts, corporations, and things like that. It's still above $30 in WTI, way above the low seen last week of 26, but off the highs, and this sort of sours the mood a bit. Asian markets are sliding. Also, this is souring the mood. This is, of course, I think it's more like profit-taking reaction towards the end of the week than a real shift in the mood. But anyway, this means that the euro and the yen are strengthening, the rest are weakening. Okay. News overnight is that there's no news. The EU summit did not reach an agreement. Apparently, UK Prime Minister David Cameron upped his demands, and the EU leaders could not reach an agreement. I believe they eventually will reach an agreement. Everybody wants a happy end to get onto the referendum and to get over it. Okay. There's some talk about early elections in Australia. I don't know how much it is real, but anyway, this is a bit of political uncertainty. And, well, China contemplating some kind of minor tightening. So far, it's meaningless. Anyway, we're talking about risk off. We're talking about euro dollar 111.20 off the lows of 110.70. Very, very nice support line over there at 110.70. This is also the post. Look, it worked as resistance and as support. Now again, a support. 112 is some kind of resistance. Dollar yen, the yen enjoying the risk off sentiment, the negative mood. We already fell to a low of 112.70, under 113.20, which is very minor resistance. Okay, line in the sand is probably 111. That's where the Bank of Japan intervened. And 114.25 is further resistance. Pound dollar, we talked about that. A bit struggling. Well, not going anywhere fast. At least 142.30 is support, 143.65, 144.50 resistance. Dollar CAD, 137.50 at the moment. In the range, very nice range there, 137.87 resistance, 137.20 is support, followed by 136.20. Oil prices matter a lot. The Aussie dollar is back to the lower range between 70.80 and 71.40. As I said, some political uncertainty, nothing really to get worried about. 70 is real support, is strong support, sorry. 72.20 is high resistance. New Zealand dollar is quite balanced within its usual range of recent weeks, 65.80 to, 65.50 to 67. Okay, so we talked about the wooden market, so let's talk about events we had yesterday. ECB meeting minutes didn't surprise too much, but we had good news for second week in a row. This could be significant from the US jobless claims. Second beat, fall in jobless claims could mean a better NFP. Let's look at the events for today. UK retail sales adding to the mix, adding to the mess for the pound. Always a market mover. Always remember with UK events, sometimes there is a leak or sometimes there is some kind of front running. So this could be significant for this could be significant, of course, for the pound, at least in the short term before the release and also after the release. Okay. At 1 GMT, Loretta Mester of the Cleveland Fed, she will be speaking. She's a hawk. If she goes dovish, it's significant. It could weigh on the US dollar. If she's hawkish, insignificant. Okay, but the big event, more important event of the day, is the release of the Consumer Price Index in the United States. Most important thing to watch there is the headline. Sorry, is the core figure year over year. It's expected to remain at 2.1, which is, of course, relatively strong and around the Fed's mandate. And a reminder that inflation is not that bad. We'll talk about next week's events. Next week, we also have the core PCE price index, which is an inflation figure that the Fed likes even more. Okay. And at the same time, we have a double feature from Canada. So dollar CAD will be interesting at this time with US figures, Canadian figures. Retail sales usually have a bigger impact than CPI. Anyway, I would wait for the dust to settle on all these three events if you want to enter a position in dollar CAD. And Eurozone consumer confidence has a little bit impact, but it could it's worth watching as well. Eurozone figures in general disappointed this week. For example, this morning we had a minor figure from Germany, the PPI, which fell short of expectations. Anyway, that's worth watching. As always, on Friday, we have last-minute scrambling to close the week. I think that's why we're seeing a worsening of the mood. That's why we're seeing things move for the euro, for the yen against all the others. I don't think it could. I mean, I don't think it's a big shift in sentiment. Just some kind of Friday profit taking. Okay, so that's the wrap up for today, and we'll begin the preview for next week, and then I'll answer the question at the end. So this is the preview for the week of February 22nd to February 26th, the last full week of February, a busy month, a cold month, I know in the UK, also here, and on Monday we have Eurozone PMIs. It's not written here on the slide, but worth mentioning. More importantly, on Tuesday we have the German IFO business climate. IFO is Germany's #1 think tank, and they have a lot of impact. We also have CB consumer confidence and existing home sales from the US. Both, I would say, sort of second-tier figures, but they're mixed together. Could, if they both go in the same direction, it could be significant. On Wednesday, we have new home sales, which are more important because when a new home is sold, it has more impact, more economic activity than when it's just an existing home sale. And crude oil inventories, which always, well, for oil at least, they move markets a bit. More importantly, on Thursday, UK GDP, the second release, it usually doesn't change, but any small change could be significant for the already vulnerable pound, okay? Okay, and Eurozone inflation, final inflation figures for January. It has an impact on the ECB's decision. And durables goods orders, the core figure, is important for investment and is watched by the Fed. So Thursday is a very, very busy day. Okay. And on Friday, it doesn't end there. We have the US GDP. It's the second release. It's the first revision. And that's big because in the US, we usually have significant revisions, and that could be very, very significant. At the same time, we also have the core PCE price index, very boring term, but this also has an impact on the Fed. So it's sort of the week warms up, every day becomes more and more interesting. Watch out again for the mood for oil prices next week. These things will continue accompanying us. Also news from China. And I guess we will have some kind of a deal on the UK's EU membership relatively soon. Okay, so this is the preview for next week's events. Before we go, let's answer the question about Euro Pound, okay? Euro Pound, I think, yeah, I mentioned it. Generally higher, that's because the euro is enjoying safe haven flows and the pound is suffering from uncertainty about the EU summit over there. I think I think it's only profit taking and that the EU summit will eventually result in a deal. So perhaps my bias is short on this pair, okay? But because I think it's a bit, both things are a bit temporary, but you never know. Anyway, lines to watch are 78, 70, and 77, the round number, support and resistance. Well, you can see here some kind of head and shoulders, or forming head and shoulders. Anyway, my bias is I think it went a bit too high, this pair. Now we have relatively better market mood, which plays against the euro, and relatively unfounded worries about the UK's membership. So in the European Union, so I believe we could still go down from here, but you never know. What else? Yeah, okay. I don't see here any further questions. Just one last look at euro dollar. Yeah, not going anywhere fast. We're already 20 pips off the highs. So actually towards the end of our show, we're seeing euro dollar reigns its gains. Again, I think it was more profit taking. I don't know if it's over, but yeah, we also had from China a denial that they're contemplating any monetary tightening. So if China is not tightening, it's of course good news for the whole world because the world needs as much Chinese stimulus as it can get. Okay, in general, it needs any kind of stimulus it can get. So if China is not doing any trouble, if China is helping out, then of course there's less need for safe haven currencies and euro dollar is falling. Okay, so yeah, that's it for today. Thank you everybody for coming. I wish everybody a safe and successful trading day. It's going to be a strong close with the US CPI. Sorry about the having to run for a second earlier and for starting the show a bit late. Anyway, we'll be here as usual on Monday morning and talk about everything that will happen today and of course prepare you for Monday's trading. It's a relatively slow day, but it doesn't mean no action. Contrary to this Monday, it's going to be, all markets are going to be open, including the US market. So I do expect a lot of action. All right, so that's it for today. Thank you and bye-bye.